So today let's talk about two of the most successful, but also most secretive investors of our time, Nick Sleep and Quays Zakaria. These guys built an investment fund that just absolutely crushed it. And then, at the peak of their success, they just vanished. It's an incredible story, so let's get into it.
First, I just want you to look at this number, 921%. That's not a typo. That was the total cumulative return of their fund, the Nomad Investment Partnership, during the 13 years it was active, from 2001 to 2014. Just let that sink in.
Now, the big number is one thing, but context is everything. That 921% works out to a compound annual return of over 20% for 13 straight years. Now look at what their benchmark, basically the world stock market, did over that same time, 117%. Look, this isn't just beating the market, this is playing a completely different sport on a different planet.
And the guys who pulled this off, Nick Sleep and Quays Zakaria, were anything but typical. After this insane run, they just stopped. They closed the fund, gave all the money back to their investors, and retired. Both of them were only in their mid-40s. So you gotta ask, right? How in the world did they do it? And maybe even more puzzling, why did they walk away?
Okay, so here's the plan for figuring this all out. We're going to start with their one big idea, the earned secret that powered everything. Then we'll see it in action with huge companies like Costco and Amazon. After that, we'll pull out 3 killer lessons you can actually use. And finally, we're going to solve that mystery of why they just disappeared.
So what was this earned secret? What was the magic formula? Well, it was a concept they called scale economies shared. Seriously, this was the absolute bedrock of their entire philosophy. Pretty much all of their success boils down to this one powerful idea.
So what does that actually mean? Well, it's pretty simple when you break it down. Imagine a company gets bigger, right? It gets more efficient, it saves money. The normal thing to do is to keep those savings and boost your profits. But with this model, you do the opposite. You give those savings back to your customers by lowering prices. And that's when the magic happens. Lower prices create happier, more loyal customers who buy more, which makes the company even bigger, which leads to more savings, which you give back again. It's this beautiful, powerful, virtuous cycle.
And this table just lays it out so clearly. The traditional company asks, how can we make more profit for shareholders this quarter? Any cost saving is pocketed. But the scale economies shared model asks a totally different question. How can we deepen our relationship with the customer for the long run? The goal isn't next quarter's earnings report. It's building a deep competitive moat, a massive, almost unfair advantage that competitors just can't cross because it's built on years, even decades of customer trust.
And look, this wasn't just some theory they cooked up. Jeff Bezos was putting this into practice at Amazon, and Sleep and Zakaria were paying very close attention. Bezos himself said it. This isn't a math problem. The short-term math always tells you to take the higher profit. He said it was a judgment call, a belief that relentlessly giving back to the customer would, in the long run, create something way more valuable.
All right, let's make this real. It's time to look at Costco and Amazon, because this is where you can see the theory just come to life. These were two of Nomad's biggest and most important investments.
You know, there's this legendary story about Costco that just says it all. So they get this amazing deal on some designer jeans, way cheaper than usual. A buyer on the team says, hey, great, we can price these normally and make a much bigger profit margin than our usual 14%. Makes sense, right? But the founder, Jim Sinegal, immediately shot it down. He said, we have a contract with our customer to always pass on the savings, and that contract must not be broken.
And right there, that's the moat. I mean, how do you compete against a company that literally refuses to make more money when it easily could? You can't. They aren't playing the same game as everybody else. They're not managing for today's stock price. They are managing to build a fortress of customer loyalty that will last for decades.
Now, here's the absolute genius of Sleep and Zakaria. They saw what was happening at Costco, and then they looked at this young, scrappy internet company called Amazon, and they saw the exact same DNA. They realized Jeff Bezos was running the Costco playbook, but he was using the internet to put it on steroids. It was the same virtuous cycle, but now it could scale to the entire planet.
So what can we, as investors, actually learn from all this? Let's get practical and distill this down to 3 lessons for your portfolio, straight out of the Nomad playbook.
So let me start with a question for you. What do you think is the single biggest, most financially devastating mistake an investor can make? Think about it for a second.
So what did you guess? A lot of people would say buying a stock that goes to zero.
And sure, that's bad. But Nick Sleep argued that's not it at all. The worst mistake is selling a true compounding machine way too early. Think about it. If a stock goes to zero, you lose 100%. But the opportunity you lose by selling, say, Microsoft in 1990 or Amazon in 2005, that loss is almost infinite. It's mathematically a much, much bigger error.
I love how he framed it with this quote. He said, "The best investors aren't investors at all. They're entrepreneurs who never sold. You have to think like a founder, like someone who is building this thing for the long, long haul, not like a trader trying to time the market."
Okay, lesson number 2. Patience is your superpower. In a world that is completely obsessed with what's going to happen next month or even next week, the ability to genuinely think in 5, 10, or 20-year chunks of time is a massive competitive advantage. Swift said one of their biggest secrets was simply having investors who were willing to be patient with them. That gave them the freedom to ignore all the short-term noise.
And the third lesson, this one really flips conventional wisdom on its head. Concentration is the logical thing to do. Their logic went something like this. If your real advantage comes from knowing a company deeply, and let's be honest, you can only really know a few companies inside and out, then buying 100 different stocks you barely understand doesn't make you safer. It actually makes you riskier. That's why they were willing to put a huge chunk of their fund, sometimes even 70%, into their single best idea.
Which brings us, finally, to the last piece of the puzzle. Why did they walk away? With this amazing track record, this killer philosophy, why would you just stop?
And the answer, which you can see in their farewell letters, is just profound humility. In a letter to Warren Buffett, Nick Sleep wrote, "It appears to all the world that the performance was created by Zach and me. That is not the case." He said the real credit belongs to the companies themselves. They just saw their job as finding these amazing businesses and then just staying out of the way.
And you can see the actual letters right here. On the left is Sleep's letter to Buffett, and on the right you can see Buffett's handwritten response. It's so simple but so powerful. He just wrote, "You and Zach have made the right choice. I predict you will find life is just beginning." I mean, what an incredible endorsement from the master himself.
So I want to leave you with this final thought. The big lesson from Nomad is that if you have a truly great idea, you should let it dominate your portfolio. But maybe the final lesson is bigger than that. It's a question we should all ask ourselves. What is your single best idea about how to live your life? And are you letting that idea dominate what you do every single day?